Welcome, my name's Jeff Driver, General Manager Business Development and Investor Relations for AMCIL Limited. I have with me today Mark Freeman, who's the CEO and Managing Director of AMCIL, but also the Portfolio Manager for AMCIL Limited. We're here today to discuss the results we've just announced for the half year to the 31st December 2023. So Mark, I just want to touch briefly as we start what the major highlights of the result are.
Yeah, so I'll touch on some of the features of the result and then I'll come back and talk through the portfolio and some of the transactions. So the half year profit after tax was $4.1 million, which is pretty much in line with the previous corresponding period last year. The interim dividend of 1 cent per share fully franked is also the same as last year. In terms of the portfolio performance, over the 6 months to the 31st of December, the portfolio returned 11.7% when we include franking. The index over the same period, including franking, was 8.3%. And if we look back over the full year, so the 12 months, the AMCIL portfolio returned 21.2%, including franking, whereas the index was up 14%.
Mark, it was a very satisfying period for the portfolio performance over the 6 and 12 month period. You just want to outline some of the reasons behind the strong performance?
Yeah, look, we've certainly got a quality focus within the portfolio, and some of our stocks had really good results and returns for the year. So stocks like Hardies, Car Group, Reece, ARB, Goodman, all performed very strongly and helped drive the performance of the portfolio. So again, you sort of look to why that is the case. Certainly there's a sense that interest rates have peaked, and in fact the market is starting to assume now that interest rates will be cut. When you have those environments, you tend to get a boost to the valuation of what you call quality companies or long duration, and some of those had very good runs. But that's only part of the story, and as I touched on, these companies generally produce some really good profit results, and ultimately we're in companies for their long-term growth in profits, therefore earnings and dividends. And as we saw the reporting season in August, then the AGMs we saw towards the end of the year, that all supported the quality of the businesses we're in, although they've probably had a bit of a valuation kick towards the end.
Thanks, Mark. So I think the portfolio has undertaken quite a bit of change over the 12-month period. And certainly that has benefited the portfolio performance. Just want to touch on some of the major changes and strategy behind the change in portfolio over the 6 and 12 month period.
Well, if you look at just particularly the 6 month period, where we did exit a couple of stocks. We took a position in Medibank when they had their cyber incidents, and we talked about, if you look through the framework we're applying to AMCIL, we stick with the quality. So we certainly rate the management of Medibank really highly. It's got a strong balance sheet, good returns, and it suffered a short-term event with that cyber incident. The stock got sold off. Then the market started to recover and move on from that story. The share price recovered, and so we've now exited that position, although the share price has continued to move up. But the purpose was to capture that dislocation in price in what we thought was a good quality company. We also did exit Fineos in the portfolio. Some interesting attributes to that business, but it's just struggled to produce the cash flow and the profits we would look for, and we've put that money into other stocks. So if you sort of say, well, where have we moved that money to? 4 of the new stocks in the portfolio, each of them a smaller position. Objective Corporation's one of those. IPD Group did a capital raising and we participated into that. Mineral Resources and Altium, and I guess the feature that cuts across all 4 of those management teams that have high level of equity, and in some cases we would call them owner-driver businesses, or have that owner-driver characteristics where the people running the company have large equity stakes. And we've seen over the years, when you have that dynamic in play, if we think they are good operators, good at running businesses, have the track record, in each of those cases, highly profitable companies, typically good balance sheets, high return on capital. For the longer-term investor, they tend to be great places to be. So we've introduced those into the portfolio, but they are smaller positions as well. And we'll continue to look for the dislocations in the more established businesses. As I pointed out, the Medibank situation. For example, we topped up our NAB holding during the year. We like the management, we like the people. They're achieving good return on equity. now for a bank, and we thought there was some value there. We added to that, and that's played out as well in the portfolio.
Thanks, Mark. So we've just talked about the last 6 and 12 months, which has been quite active in terms of the portfolio. What are your expectations for the next calendar year, or this calendar year coming, I should say?
Yeah, obviously, based on that movement in the markets, the market's had a good run, and we're seeing it more fully priced. And certainly some of our stocks, I said, have benefited from that. And then from time to time, we do sell a few call options against our position. We're sort of a reluctant seller of good stocks. So sometimes writing call options can bring in some extra premium. We've done a little bit of that. And it probably means that where we're looking for value, perhaps has moved away from those quality stocks at this point. But as we saw throughout the last 12 months, the market always presents some opportunities. So, we watch the stocks we're in. We've also got a watch list of stocks we'd like to have. So any dislocations in prices we get are of interest. And for example, Woodside's been a bit out of favour recently. The market's been concerned about approval processes for new projects and the like. The stock's been quite weak. So again, that's a situation where a large established company has gone out of favour. So I've topped up our holding there. So we'll look for those situations. But in the meantime, we're not in a rush to do anything. We're certainly happy with the portfolio we have.
Oh, excellent. Thanks, Mark, and thanks for your time today.
Okay, thanks, Jeff.